Okay, Paul, thanks for joining us
Thanks
up
for
here.
having me.
Hopefully we'll get some more people walking over time, but why don't we start off, why don't you tell us a little bit about your background prior to CoinList?
Yep, so immediately prior to CoinList, I was working on a company called Republic with AngelList's former general counsel. So we had left to start that over in 2016, and the gist of the platform is allowing anyone to invest in startups, and this obviously branched out of AngelList, where most people are doing investing in startups. And we had both worked there since early 2013 when AngelList was spinning up its online fundraising platform, him as general counsel, and I was on the engineering product side. And so we got a chance to develop that product out and kind of get a base for these next two investment platforms.
And so what was the genesis of CoinList?
Basically, CoinList started sometime in 2017. The conversations probably started earlier in 2016. As a joint venture between Protocol Labs and AngelList to run the Filecoin token sale and ICO. So AngelList was contributing kind of the compliance expertise and investment expertise, and Protocol Labs obviously on the crypto side and building out the actual initial platform. And as we kind of collaborated on that token sale through 2017, it became clear that a platform like CoinList was pretty necessary within the space, and that everyone was kind of repeating the same work over and over again. There wasn't a standardization of processes for either investors or companies, and we sought to kind of provide a platform that could do that for people.
And so when was the first CoinList ICO?
So the first one would have been the Filecoin sale, but the one that happened after that was Blockstack. So Blockstack happened over I believe it started in end of October, early November, and carried on for about a month. So we went from kind of starting up as a fresh new independent company to launching our next ICO in a couple months.
And so what did you learn from the first one and Blockstack? How has your thinking evolved?
Yeah, I think there's been a ton of learnings between the Filecoin sale and the Blockstack sale, probably a bit different between the two. Within the Filecoin sale, I think some of the key learnings were just that, one, sales structuring is quite important, and communication with the community is quite important. And the Protocol Labs team did an excellent job of actually trying to engage with their community, but ultimately ran into some operational hiccups towards the end and had to make some revisions to their sales structure. And that ended up frustrating some people. So that's like one hiccup, is just basically trying to map out all your operational stuff, and that's no fault of theirs. I mean, anyone running into kind of this big of a sale is going to have some problems. And the second one there would have probably been the pricing model, which I anticipate they regretted a bit, just because it caused so much headache for investors, so much headache for them, just operationally trying to calculate out how to do linear pricing and things like that. So they moved away from that. Blockstack then took that and learned from it, and I think we're seeing a lot of this in the space, is kind of the learnings of sales from other sales. And they implemented more in the way of governance. They implemented more in the way of fixed token price to kind of eliminate some of those operational hassles. And then they ran, obviously, their sale on CoinList, so all the operations and logistics of the sale and the compliance pieces of the sale we helped out with.
And then you did the YouNow, and that, I thought that was a really interesting ICO, particularly kind of on the token economics side of things. I mean, how are you going about choosing? I think that's got to be one of the most difficult things, because obviously there got to be lots and lots of companies that want to get on the platform.
Yeah, I think at times we've had a backlog of north of 1,000 companies applying to work with us in various capacities. So diligence is a bit hard, as it always is, and picking winners is a tough one. I think what we tend to look for is, one, a baseline of companies that are legitimate and well-structured, so avoiding any of these kind of exotic corporate structures that we might have seen, where you're incorporated in Gibraltar, you have a Swiss foundation, and God knows who's on the board of each thing and who actually controls the purse strings. So one thing is just making sure the company's established decent corporate governance. The other is that they've actually got a use case that they're solving for. So, I mean, what we're all seeing recently is that anyone can add blockchain to anything and try and make it an applicable use case. And obviously, some are a bit more defensible than others. We try and look for things that fundamentally require the use of a blockchain and the use of a token, rather than just nailing it on top of some other product and saying that it's worth 10 times what it was before. And the other thing is we look, we're in active communication with investors in the space. So people like you and crypto hedge funds and whatnot. So chatting with them and kind of understanding their diligence process and incorporating it into our own has been super helpful.
And when you're talking to investors, obviously, we've been on a wild ride, over the last, 9 months. Where do you see investors as being at now in terms of their appetite for, for ICOs and what they're looking for relative to what they were looking for a few months back?
Yeah, so I think most investors are getting a bit more sophisticated in their approach. So there was a fervor, I think, last year that really took over, and any project was basically getting funded. You could spin up a marketing page and raise $10 million, and obviously that's not a very sustainable approach. So I think investors are getting smarter. They're asking more questions around how have you structured this company? Are you doing things in a compliant way? They're expecting a bit more of these companies and a more kind of more professionalization is a term that we use internally. So companies that have really put some thought into their token sale and buttoned down kind of all elements of it, whether it be operational, compliance, governance, sale structure, what have you.
And where are you starting to see, there's been a lot of talk here about institutions, and when are institutions going to get involved? What are you seeing on that side of things?
Yeah, I think the institutions are interested. So we've seen a bunch of them kind of cropping up and taking interest in the space. You see investment banks showing up to crypto events. You see family offices, increasingly talking about the space and how to actually reason about it. And I think it's kind of analogous to when private equity was first starting up, and there wasn't much in the way of an actual rigorous diligence process or framework that people could apply, and that these family offices or institutional capital pools could actually apply. And I think that's what we're going to be moving towards as part of that professionalization, is actually having reasonable diligence frameworks and means for evaluating these companies in a more consistent way, rather than a bit more finger to the wind and kind of a prayer to the blockchain gods or what have you.
And what do you see in terms of kind of how you guys thinking about utility tokens versus security tokens?
Yeah, I think we've seen a lot of opinions in this, and it's a bit of a gray area. It's always evolving. And I think the smarter minds in the space are converging on a particular mode of analysis, which is basically, while there isn't a clear bright line, a lot depends on how you are doing the sale and what these tokens are being used for, and that there isn't a static state to these things. So a token can be starting off as a security and then move towards being a utility based off of how it's being used. So for example, I do my token raise and there's no real function to the network right now, and I raise $50 million. And again, at that point, hard to argue that it's not a security because it's being used for pretty much only speculative purposes. But if the token network then actually starts being used within the industry that it's in, so it's like Filecoin starts getting bought up by Amazon and Google and all sorts of big entities, and it starts actually having a role that's playing in the marketplace, it's feasible that then shifts the tokens analysis towards being more utility than security.
And so CoinList is looking to play in both areas?
Yeah, so we've worked with tokens that think of themselves as utilities. We've worked with tokens that think of themselves more in the direction of securities or have a securities component to it. We treat all token sales we do as if they were offerings of securities, and that's, again, just to stay on the safe side, given that we don't have a clear answer on this.
And as you're looking out now over the rest of 2018, what are you guys seeing?
Yeah, I think it's, again, that continued professionalization of the space and people actually getting serious about treating this as if it were an actual fundraise and not free-for-all for cash. We're seeing, I think, probably more in the way of companies taking interest in how they can tokenize the elements of their equity, and a general movement, I think, towards the tokenization of traditional assets and seeing how those could be, what efficiencies can be gained in a tokenized version of trading those assets. And I think that's a really interesting element of it. I think people are also just getting far more savvy about compliance and regulatory compliance. You're seeing far fewer sales doing kind of a no KYC, AML, no accreditation, just free-for-all, send ETH here and we hope for the best. And I think, again, fewer of those exotic sales structures, so much more in the way of Delaware C Corps, flat prices, or at the worst, like auction models, but much less in the way of kind of weird, convoluted structures that are more designed to kind of put up smoke and mirrors than communicate transparency.
And when you talk about the tokenization of traditional assets, what assets do you think are going to be the first ones that are tokenized?
I think really interesting ones are things like fund interest, startup interest, and these aren't necessarily the ones that will ultimately dominate the space, but I think they're very natural ones where startups could choose to add an element of liquidity to their fundraising. Investors would pay a premium on that liquidity, and then ultimately, startup equity ends up being somewhat tradable. You kind of alleviate the pressure on the need to go public potentially, and in general, are able to offer things that the private market and startup market hasn't been able to do before. And we've seen, initial cuts at this with the BCAP token, blockchain capital token, trying to tokenize their fund interest and make that tradable.
Why don't you think that we've seen more of that? I mean, because the BCAP was a while ago. They just raised more capital.
Yeah.
They didn't do a token sale for it.
Yeah, I think that people are running into the fact that it's hard to structure these things in a way that you feel safe about, that your investors feel safe about, when there isn't too much in the way of regulatory guidance. And so companies who are willing to take the risk or are confident in their approach are moving towards this or evaluating it. But I think most traditional companies or most normal startups that aren't operating in the space have not yet seen the incentive to do it. And honestly, a lot of the infrastructure isn't in place. There isn't an active trading token securities market. There isn't great mechanisms for liquidity or great infrastructure for compliance of tokens that are deemed to be securities quite yet. And so I think as that evolves, as regulatory clarity evolves, we're going to see a bit more of it.
And as you're talking to startups that are thinking about tokenizing on, doing security tokens and selling their equity, obviously they'd be getting diluted if they do that, as opposed to when they issue utility tokens, they're not seeing any dilution. So how do you think, they're thinking about that trade-off?
I think in general it goes back to that piece of diligence or evaluation point of diligence that we do, which is there an actual reason for this to be on the blockchain? Are you just taking something that could easily be a centralized database with an API, adding the word blockchain to it, making it notionally decentralized, and using that as your fundraising mechanism to avoid diluting yourself? And that strikes me as a bit disingenuous and could, in cases, border on fraudulent. Whereas something that's an equity fundraise, again, you're going back to kind of traditional venture, but making it more efficient, making it potentially more liquid, and that's, I think, much more interesting and much more based in kind of the realities of the marketplace. And so
you think that's going to be an ever-increasing part of the future, is the security tokens, or the tokenization of the equity?
Yeah, I think that, and not just equity, but all other assets. I think, again, as with a lot of things in the space, we're very early, and there isn't a ton in the way of meaningful infrastructure for this. And when it evolves, I think that's a bit of a flywheel. So when you have a set of liquid token markets in securities, and when you have confidence from regulators that you're able to do something in a compliant way, and when you have the infrastructure to actually do that without it being too burdensome, I think you're going to see a lot more.
Obviously, if you look at traditional crowdfunding, I think they've had the most success in crowdfunding of real estate. So I'm sure you guys have seen some real estate opportunities. How are you thinking about those?
Yeah, it admittedly is not an immediate expertise area for us, so not one that we've delved too deeply in. I think that from conversations with people who have kind of operated in the real estate crowdfunding space, the hypothesis that I've heard is just people understand real estate. This is like one of the things they get. They'll invest in public companies, they'll invest in startups, and then they'll invest in real estate, and that's kind of where things drop off in terms of exotic investments. It's because everyone gets it. It's a house, it's a building, it's a whatever. And that's the leading theory I've heard for people active in that space. So could be interesting, comes with a bunch of problems or things to solve, and not the most natural thing for us, but something that we'd look at.
And as as that starts to happen, do you think that traditional investment banks are going to start coming in and participating in the market?
It could be. I don't know if that's going to be the trigger point for them to actually come in. I think a lot of it is going to be the regulatory comfort. They have a lot to lose by taking bets on this stuff, and until they feel like they can actually make the investment into the space and do it in a reasonable way, I doubt they're going to do it. That said, I think to the extent that a lot of efficiencies can be gained in tokenizing assets and trading them in liquid token markets, then I think there will be a move of investment banks towards adapting to that.
And as you're looking at projects to get involved with, how important to you guys is the community around the project?
Oh, it's huge. I mean, I think every successful project so far has either had a very active community and a very engaged community. So Protocol Labs had an absolutely excellent community. Props has a huge community of millions of investors, and Blockstack the same of developers. So I think there's basically two modes you can go down. Either build a really excellent community or build a really tight-knit venture community and really pound the pavement and get those big checks in. And we've seen both work. I mean, I would say that on the CoinList platform, there's very little correlation between the number of investors and the amount of money raised, and I think that's kind of indicative of that split, that you can bring in a bunch of big checks, or you can bring in your community or kind of broader angels into the space. Just depends on the model that works for you.
And then how do you see, how do you start to gauge the vitality of the community?
Yeah, I think so some of the signals we would look for if we're doing diligence on a community would be, one, how large it is, two, how active it is, and three, what are the key kind of like, what is the level of conversation that's happening? Is it a company that's based in the US with only potential investors coming in there who aren't necessarily native English speakers and just saying things like pump and dump or what, kind of the obvious factors of
that would be a negative thing.
That would be, yeah, unfortunately that one's a negative one. But then some communities are actually much more developed, and so there's meaningful conversation about, why is this kind of structure being taken? Why are you guys doing X, Y, and Z? Why does this make sense? How do I do X? And those are kind of much more engaged communities, much more high-quality communities, and I would take a kind of close-knit but high-quality and engaged community over a big one that just has a bunch of spam running through it any day.
And so when you start to get involved in a company, do you help them with the community? What are the kind of different touch points where you're really trying to add value to the company outside of just the ICO?
Yeah, so in general, we have two lines of product, effectively. So one is a compliance and technology services product that we help companies run their KYC, AML, their accreditation, do the customer support on all that, and take a bunch of operational headache away from them. And that one is kind of open to anyone. It's just straight up SaaS product, effectively. And the other side is our registered investment advisory business. So that's one where we actually have a relationship with the investors, but we work with the companies to kind of understand their product, do the diligence on them, and kind of vet them. And in the process of actually working with them on either product, we'll try and offer advice based on what we're seeing in the market and kind of what we've seen from other ICOs. And so if a sale is going to use a structure that seems like a bad idea, we'll say that we've seen it go wrong in X, Y, or Z place, and play some degree of a kind of consultant or advisory capacity ad hoc. Like that, but we wouldn't go and build your community. We're not going to go and write your white paper. And if you need to outsource, those pieces, you might want to reconsider your token raise.
And then what about the community kind of post the ICO and when the coins start to trade? It's been an interesting thing that I think there's been a lot of thought in community building for the ICO, but less thought in the community kind of post the ICO.
I think a lot of high-quality projects are still actually focusing in post-community ICO. I think a lot of them, again, orient around building communities. So Blockstack, super active in building community, have a bunch of events that they put on and conferences that they put on to try and engage with the community. They do bounties to engage developers to build various things on their platform. So I think a lot of thoughtful companies are actually quite focused on community both before and after, and it would be a pretty negative signal if they dropped off right after raising money. And
so, again, as you start to look out, over the rest of this year and over 2019, do you think you guys will dramatically increase kind of the volume of ICOs that you're doing, or do you think of slower growth? How are you thinking about growing CoinList?
I think to the extent that there are more high-quality projects, we'll grow the volume, and to the extent there aren't, we'll keep the volume low. We're not looking to spin out as many deals as we can. We're strictly looking at getting at the kind of highest quality projects and helping them succeed and making their lives easier. To which end, hopefully the space is growing, and hopefully the kind of bottom end of the market drops out, and there's more focus on building kind of long-term, high-value companies, and then would love to work with them.
All right, well, from your mouth, right? Let's have a great rest of the year and, to the great companies. Thanks a lot.
To the great companies. Thanks, Lee.